Hey, what is up, everybody? This is Evan Carthy from evancarthy.com. Today, I'm going to go over a super long-term look at crude oil, the futures market. Basically, I've been looking at it, just seeing where I think it's headed, how much lower it could go, if it can go any lower, and found something interesting about it. Spoiler alert, it could go down into the single digits, and that's what I want to cover here. Go over the history of the chart real quickly, and then show you how I came up with the conclusion that I really think oil's heading down to about $6 or $7 a barrel. So, starting back over here, what we have is these lines on here. Don't worry about those. All those are kind of pivot points. They show the highs and lows. They help me draw the Fibonacci retracement and extension levels, because that's what I mainly use to trade. So starting back here, back in about December of 98, using that low right there, I'll put my Fibonacci retracement level on it. Move it up. You can see it came back down right over here, but in this guy I've been following, E-mini addict, David Halsey, what they look for is when price breaks at 61.8 Fibonacci retracement level, they consider that part of a new trend forming. Now obviously for this one that did not happen. It did close below the 61.8, but then went up and hit the extension exit. He uses the negative 1.236 extension level for his target. I like using the negative 1.272, which that's my line. It kind of like that dark brown, and I have the line he likes using in that kind of vanilla colorish. But anyways, extremely close together. But I really like the way he trades, and so that's kind of why I'm adopting a lot of the stuff he's using in his trading with the way I'm trading. But anyways, so you can see price came back down. Now, if you want to consider that not a correct kind of entry for it, or not entry, but rather that the tide had shifted the other way and time to look for shorts, well, then you can just move it right back up to here, and then you can see it hit the 50% Fibonacci extension level very easily. Excuse me real quick. Sorry about that. Got terrible allergies. So price came down, hit that. So we have our pivot low. Now we have our pivot high. Hit that 50 back perfectly right there. 50% Fibonacci retracement level. Moved up and hit the target right there. So then when that happens, you move your Fibonacci level to that previous swing low, and then move it up, and then move the high up to where it kind of retraced back from. You can see it came down and hit the 50% Fibonacci retracement level perfectly. So we know that we are in a super solid Fibonacci retracement level, where the algorithms and all the programs out there trading the crude oil market are all buying right here. You can see it barely came down and touches. Now again, this is the monthly chart. So it came down there and touched it, went back up there, hit it perfectly, hit it, and even went above it some more. So then we just move it back to right there. There's the pivot high, pivot low, came down here, they hit the 50% again, came back up there, barely ticked the 23.6 level, slightly missed at 27.2 before it started retracing back down here again. So if you had moved, obviously if you had moved your Fibonacci retracement level up to right here, then that would have gotten taken out. But if you move it up just a tad bit more right there, because one of the things that I do trade is when a Fibonacci level does get broken, you take it back to the next to the next swing low. So right here would have been the swing low we were using for it, but since that one got broken, let me just highlight this so I don't lose my spot right here. But since that one obviously got broken right there, not only went past 61.8, but went all the way out the other side of it, you just move it back to the previous low, which is right there. You can see it would have worked out great. Now it did go down, but didn't even close below the 61.8, and it came right back up, then came back, and as you can see, there's a lot of people getting out right in this area right over here. So we know that was a worthwhile trade. So we'll move again, pivot low back to right there, and then from there it never comes back again. The only time next time it comes back is when it just straight blows it out. So I'll show you here real quick. So you see when price came back down, if you were looking at trying to take this back up to these levels up here around $170 for the price of oil, price did hit the 50% and there was a little support for it. You can see it went down, but went right back up. But then next month opens, it's just pretty much a straight bar down. It took everything out right there. So definitely the trend now is down. So with the trend being down, you just take your Fibonacci retracement level, draw it to the top, draw it to the bottom to whenever it's going to stop. It stops right here. Now it starts moving up. So what you'd be looking for right here is for it to hit the 50% retracement level right here, and then you're looking to short it back down. Now there was around that level some resistance that took place, but then you see price just came back up, took out the 61.8 level right there, and then just started doing some interesting things. So we'll go ahead and take that off of it, because this is, in my opinion, it is a valid area that you can use to trade off of right there, because I consider it hitting the 78.6 level. That's really when the trend changes for it right there. But for the sake of this right here, I'm gonna show you just one other, because it actually does coincide with the other level I found for it that I'll talk about later. So we'll come back to this one. So then when price does that, you just start off with the Fibonacci extension level down here to the low. Price did come back right here to the 50%. So you're thinking at this point that probably now price is going to hit that 50% and then move the target back up to about the 130, 140 area for it. But obviously that never happened. It sold off. So within that, you don't really have anything. You don't really have anything else that's going on for it. You're just waiting for that one to be complete. The only thing that you really had inside of there was a little move right there. You can see it came back, hit the 61.8, went hit the target right there. But then obviously hindsight is 2020, but look what starts happening right in here. It creates a symmetrical triangle right here. And when these get created, or these pennants, whatever, price normally breaks out one way or the other, and it's going to be a massive movement. And that's exactly what happened here. Price finally broke out of this, because for the most part, it's creating lower lows, or excuse me, higher lows and lower highs. Obviously, it's not 100% accurate, but for the most part, it did. So it created this symmetrical triangle right here, and what most people were looking at right here was this level right here, this 50% level. Now obviously when price broke out of that, price just started taking it out. There wasn't any more support down here even at the 50%, and of course nothing out at 60%. So this long position is completely destroyed right here. So when that happened, what I was looking for is using this high, because this is kind of that last move down right here. You could use either one, either this high right here or that high right there. I just chose to use this one. So again, you just draw it all the way back down over here. There's the pivot low, and then look at this. Price came up here, hit the 50% perfectly right on there, and didn't even hit the 61.8, and that has created all the resistance right there. So ever since then, price has been just trending down, trending down, trending down. Finally broke the 0% level right here. So with that said, what I'm looking for this setup to be complete, and to be honest, it looks like it is going to be complete. It's getting extremely close to it, and I don't see why there isn't any reason why this wouldn't be completed. One, there's a huge oil glut oversupply in the market. Plus, with the coronavirus literally shutting down the whole world, it's just going to get even worse. And for the production to stop between OPEC, Russia, and the United States, no one is really looking at cutting their production anytime soon. And even if they want to, they can't just flip a switch and have the oil just quit producing that day. It still takes some time. So the market is literally going to be completely oversaturated, and the likes like we have probably never seen before. Probably worse than the crash in the early 80s of what happened for it right there. So price is now currently around about $21. But to be honest, here's what I'm looking for. Now, obviously, for the target, I like using the 1.272 Fibonacci extension level. You can't use that because, oh no, excuse me, you can use it. It's at $2.87. The 1.236 Fibonacci extension level right here is about $5.96. So my prediction is the price of oil is going to come down somewhere between about $6 and $3 is what I'm looking for it before all is said and done. Now, it doesn't mean it's going to come down there and stay down there for a while before it bounces back up. It could just create, like a wick of a candle, come down there and hit it, and then bounce back up. Again, this is a monthly chart, so it may not stay down there for a couple of days, months, weeks, or maybe just one day and bounces back up for it. But based upon this setup right here on this 50% retracement, it so far has lined up perfectly for it, that it looks like the price of oil before all said and done is going to somewhere touch down between about $6 and $3 a barrel. Now I have my conspiracy theories about what will happen for it. I'll do another video about that. A reason why oil is crashing, not necessarily about the supply and demand, which of course is the big impetus to it, but some other things that go along with that. But I just want to show that on a super long term chart, the monthly chart here for the crude oil price, I was just looking at it, seeing how much more oil could go tonight, and notice that setup right there. And then if you want to use this one as well right here that I mentioned a little bit earlier, that swing high to that swing low, obviously price broke around 61.8, but still I think that's okay. That one comes in at about $6.56 and $2.45. So we have two of these 50% retracement setups right here. This one a little bit more valid than this one traditionally, if you believe that when price kind of closes above the 61.8, that the trend has changed direction, but obviously this one didn't. But still, each of them are still, between about $7 and $2.50 or $6 and $3. But anyways, I do think price of oil is heading down to single digits before all is said and done in this crash. So that's going to be extremely interesting. So if you like to, this coronavirus eventually ends, you want to do some traveling, take some road trips and stuff, probably a great time, because price of oil will be the cheapest we have ever seen it in our life, or in the past, I don't know, 30 years, 20 years. Well, it will be if you add up inflation to it. But anyways, starting to ramble right here. I just saw that interesting thing. So yeah, that's my prediction. Price of oil is going down into the single digits, anywhere between about I'll say $7 to $3. That's my prediction. $3 to $7. All right, take care out there and be safe.